We are doing this basic revision of cash flow. Are you with me?
Yes, miss.
It is used in CBSE, IAS. So when you're doing the sum, you need to know what is cash flow beforehand.
Yeah.
Okay, cash flow is as per IAS 7.
Yeah, yeah.
So cash flow is as per IAS 7. Okay, it is always prepared for a particular period. And when you are doing the cash flow, you're only going to see inflow and outflow of cash. Are you with me?
Cash.
Cash
Yes.
means cash and cash equivalent, and your cash flow is made for operating activities, investing activities, and financing activities.
Yes.
When I talk about operating activities, what is operating activity? What is operating activity? It is your
Like,
principal revenue generating activity. Okay, when I
yes.
say principal revenue generating activity means the main business activity. The main business activity would be buying, selling of goods and all. Now, in
Yeah.
operating activity, you usually follow a fixed format that you have to incorporate, that I will teach you. Investing activities, when you are talking about investing activities, it's buying and selling of your non current assets.
Non-current assets. Yeah.
You would have the interest on investments in your investing activity. Okay. Interest on investments, if you've received, it would be there in your investing activities. And if you are
Yes.
receiving some dividend, even that would be there in your investing activity. Okay. Please remember that if you're receiving dividend, it is investing activity. However, when you're paying the dividend, it is which activity?
Operating.
Sorry.
Operating activities, right?
Yeah. So when you're receiving dividend, it is investing activity. When you're paying dividend, it will be adjusted in your net profit before tax and extraordinary
That's an
items.
extraordinary expense.
Okay. When you're
Yes.
paying the dividend, it would be adjusted in net profit before tax and extraordinary items. Also, when you're paying the dividend, okay, paying dividend would be financing activity.
Yes.
So, what will be there in your investing activities, Bakib? Your investing activities would have buying and selling of your non current assets,
Non-current assets.
receiving dividend, receiving interest on investment. Are you with me?
Yes.
Okay. You talk about financing activities, so it is all the places from where you receive your finance.
Yes.
That means you're buying your shares, you're taking loan, that means you're taking the debentures. So buying the shares, taking loan, redemption of debentures, interest on debentures, this all comes under which activity? Financing activity.
Financing.
Dividend paid would also be your financing activities. Interest on borrowings would also be your financing activity. Okay.
Yeah.
Now there is one more thing which is also a financing activity is the bank overdraft. What is bank overdraft is when you withdraw more money from your bank than what you have. Okay.
Yes.
So if there is an increase in the bank overdraft, it is a financing activity. If there is a decrease in the bank overdraft, it is also a financing activity. I'll pause the video, go through it, then I'll go ahead. Your textbooks. In financing activity, you will also have your share issue expenses
Yes.
and underwriting commission. Are you with me?
Yeah.
Now, when you prepare your cash flow statement as per IAS 7, you have three things that you will write. First is cash flow from operating, investing, financing, then you get your net cash flow. Yeah,
Yes.
which we call as NICE, or I would say net increase or decrease in cash and cash equivalent.
Yes.
You add your cash and cash equivalent at the beginning, you will get your cash and cash equivalent at the end. Are you
Yeah.
with me? Now, before I
Yes,
go
miss.
the other things. I will go and teach you when you're making your cash flow statement as per operating activities. These are the four things that you should always remember. So when you are doing cash flow as per operating activities, four things you go and write it in your statement. What are the four things that you will go and write in your statement? You write cash flow from operating activities. Are you there?
Yes, ma'am.
Starting point one, net profit before tax.
Yeah.
You get operating profit before working capital changes.
Yes.
Third, cash generated from operations. Fourth, tax paid. You get cash flow or used in operations. Four
Yes.
things without even seeing the question, without even reading the question, you just go cash flow. You make this format and keep ready with some lines in between. What are the four
Okay.
things that you will write? Come on, tell me. Cash
Net
flow
profit
from,
before tax, cash
yeah.
flow from operating activity. Yeah. Then operating profit before working capital changes, cash generated from operations, tax paid,
So you get
and then
cash
cash flow.
flow used, cash flow, flow if it's a positive answer and use if it's a negative answer. So cash
Negative
flow or
answer.
cash used in operations. I'm pausing the video,
Okay.
learn this format, write this format, then I'll go ahead. Now, the first thing that you always start with, you're going to write this one, two, three, four, and five things intact. Okay. Net profit before tax, operating profit before working capital changes, cash generated from
Yeah.
operations minus tax paid, cash flow or used in operations. Now, when you go for
Yes.
this net profit before tax, so when you are in this net profit before tax, you will go to your working note. Do you remember the working note? You're going to start with the net profit before tax. Okay.
Yeah.
When you are starting with your net profit before tax, you take this, you take the net profit in your balance sheet, closing minus opening. Are you with me?
Yes. Yeah.
Okay. Sometimes this will be given in your notes to account.
Yeah.
So you will go in your notes to account, you will see your profit and loss. Okay, in the reserves section. Do not see the security premium. You will only take the closing balance of your profit and loss minus the opening balance.
Yeah.
Okay, so you start with the net profit for the year, that is as per the statement of profit and loss, the closing balance minus the opening balance. You will add
Yes.
the transfer to reserves. If there is any transfer to reserves, you do the closing minus opening, whatever positive or negative you get, you write over here.
Yeah.
Then if there is any proposed dividend, you will add. This will be of the current year, last year, interim dividend of the current year. Any
Yes.
other dividend that you've paid, that also you'll add. Proposed dividend of last year, interim dividend of current year, any dividend paid you will add. Then provision of tax, okay, of the current year, net of refund. If there is any refund, you're going to subtract it. Okay.
Yeah.
Add extraordinary expenses minus extraordinary income. You get net profit
Income.
before tax and extraordinary items. This format you've learned, right? Net profit closing minus opening, add transfer to reserves, dividend
Yeah.
proposed of last, interim of current, provision of tax current year, extraordinary items, add extraordinary expenses, add extraordinary income, minus. Whatever answer you
Yeah.
get, this answer you put over here. Are you with me?
Yes.
Okay. This answer will always be a part of your working note.
Okay.
Hmm? Then in this, what
Yeah.
do you add? In the net profit before tax. Okay. This answer you get from your working note. In that, you're going to add your non-cash, non-operating
Non-operating
expenses.
expenses.
And what you're going to subtract non-cash, non-operating income. Are you with
Income.
me?
Yeah.
So you're going to add your expenses, which is non-cash, non-operating.
Non-operating.
Expenses you're going to add and income you're going to subtract. Can you
Subtract.
give me examples of non-cash, non-operating expenses?
Like current asset.
Very good. So the non-cash, non-operating expenses would be your depreciation. What else?
Yeah. Loss on sale of non-current asset.
Loss on sale of non-current assets, which would usually be there. Okay. Then, if any share issue expenses are written off, that would be there. Okay.
Yeah.
Now, this is a thing over here. If you write off your share issue expenses in the financing activity, you will not write over here. Okay. Then what else? Goodwill
Then
amortized,
goodwill amortized.
interest on debentures. Okay. Goodwill written off. So these are your examples of non-cash, non-operating expenses. Are you with me?
Yeah.
Okay. So expenses, non-cash, non-operating, you will add. The common type of expenses that will come is depreciation, loss on sale of non-current assets, interest on debentures. These are the common ones.
Yeah.
Okay. Non-cash, non-operating income, you would subtract. So what is your non-cash, non-operating income?
Like profit on sale of non-current asset.
So you would have profit on sale of non-current assets and
Goodwill raised.
dividend received on investments,
Yeah.
interest received on investments. So these are all
Yes.
your cash non-operating income. So you
Okay.
start from your cash flow from operating activities. First thing what you write, what is the first point?
Net profit before tax. An
Then
extraordinary item. Then there is operating profit before working capital changes.
non-cash non-operating
Oh,
expenses
yeah. Non-cash, non-operating expenses.
minus non-cash non-operating income.
Minus non-cash. Yeah.
So what you get?
Operating profit before working capital changes.
Then you do working capital changes. Working capital changes would include your current assets and your current liabilities.
Yeah.
In your current assets, you have the five things. What are the five things? Stock, debtors,
Yes. Stock market.
cash and bank you will not take because that is cash and cash equivalent.
Cash and cash only.
Okay?
Yeah.
Stock, debtors, no cash and bank balance you will take, no marketable securities you will take.
Yeah.
Okay? And current liabilities would be your trade payables.
Trade payables. Right.
Are you with me?
Yes.
In current assets, prepaid expenses and outstanding income would also come. Okay?
Yes.
So over here, if your current assets, if it will increase, you will minus. If your current assets will reduce, you will add. So whatever is happening with your current asset, you do the effect in the opposite direction. Okay?
Opposite. Yeah.
And
Okay.
whatever happens with your current liability, you do the effect in the same direction.
Same direction.
Now, can you give me the entire cash flow from operating activities till here?
Yeah.
Start with,
Cash flow from operating activities.
then
There is net profit before tax,
how do
which
you
has
calculate this?
non-cash, non-operating expenses, which will
Net
be
profit
added.
before tax, how do you calculate?
Net profit before tax from working,
Working note. What is there in the working note?
non-cash, non-operating expenses, non-cash, which will be
Working note for net profit before tax.
working. Oh, okay. There is net profit for the year, closing minus opening, transfer to reserves, proposed.
So when you're doing your operating activities, you start with net profit before tax, which you find from
Yeah.
the working note, closing minus
Yes.
opening. If
Yes.
there's any provision for tax, current year add, proposed dividend
Yes.
last year add, interim dividend current year add, transfer to
Yeah.
reserves add, add the
Yes.
non-cash non-operating expense, expense is added, income is subtracted. These are
Subtracted.
the common ones that I have written. Okay,
Yes.
so you will get operating profit before what changes?
Operating profit. Uh, Working capital changes.
Before the working capital changes. Then you would do your
Yeah.
changes in the working capital. Working capital includes what? Your current assets and your current liability.
Current liabilities.
Current asset changes you will do in which direction?
This opposite direction.
And current liabilities in the same direction.
Same direction.
Trade receivables, inventory, no cash in hand, cash in bank, okay? Prepaid
Hmm.
expenses, outstanding income, and in your current liabilities, you would have your trade payables.
Trade payables.
If there is bank overdraft in your current liabilities, you could either treat it as a part of your cash and cash equivalent,
Yeah.
or you can treat it as a part of your financing activity.
Okay.
Okay, but not here.
Okay.
Are you with me?
Yes. Yes.
Okay. So now look over here. You have net profit before tax. You add your non-operating income, you subtract your non-operating expenses. What will you get?
Operating profit before working capital changes.
You do your working capital changes, and then the answer that you get, what will you get?
Cash generated from operations.
Then what will you do?
Will subtract the tax paid.
Okay, you subtract the tax paid and you get your answer over here, which is called the cash flow. Cash
Yeah.
flow from operations or cash used in operating activities.
Operations. Yeah.
Okay, cash flow from operations and cash used in operating activities. Now we are talking about this section, which is the tax paid.
Tax paid. Yeah.
Okay, either they will give you tax paid directly.
Mhm.
Hello.
Yeah.
They will give you the tax paid directly, or they would ask you to find the tax paid. Okay.
Yeah.
For this, you need to know your provision for taxation account. Do you know the format of your provision for tax account?
But
Format of your provision for taxation account? No, right? Yes or no?
no, no, no. I don't know this.
So I'm just putting it over here. Your format of your provision for taxation account. Now, when you talk about your provision for taxation account, opening balance would come here. Okay.
Yeah.
Closing balance will come over here. You do treatment for two things. What are the two things that you do treatment for? One is this tax paid, and one is this tax for the year, provision for tax
Tax
current
for the
year.
year.
Okay.
Yeah.
This tax paid would go where?
Would go like as in and get it.
Where will you record tax paid?
Tax paid will record it in cash flow from operating activities.
Okay. So this will be a part of operating activities. And this what you get your tax for the year, statement of profit and loss. Okay. Where will you
Okay.
record this?
Provision. Um,
Where? Provision for tax. This is provision for tax current year.
Current year. So this would go to net profit.
Yeah, net profit before interest and tax and extraordinary items. Okay,
Yes.
so this would go in your working note number one. Are you
Yeah.
with me?
Yes, sir.
Okay. Then the next part is you do your cash flow from Investing activities. What comes in investing activities?
Investing activities like sale of non-current asset,
Sale of non-current asset. You have purchase of non-current assets.
non-current
What
asset.
would be there in investing activities?
This thing,
What is
investment income. Wait,
yeah, investment income.
yeah,
What
government grant receivables.
interest interest on investment, dividend received, anything that you have invested and you have received the investments from that, that would become a part of your investing activity. But when it is
Yes,
investing activity, it will be particularly focused to your non-current assets. Are you with me?
yeah,
Then
yes,
you have your cash flow from financing activity. When I talk about financing activity, it will be shares issued, shares redeemed,
yes.
loan taken,
Okay.
loan paid,
No one paid
debentures issued, debentures redeemed,
is redeemed.
interest on debentures.
Yes.
Now, this interest on debentures and dividend paid, this comes at two places. Can you tell me which two places they come in?
In operating activities and net profit before
It is a
interest and tax.
non-operating expense.
Non-operating. Yeah,
And this dividend paid would come in your working note number one,
working note. Okay.
before tax and extraordinary items. So you have your interest on
Okay.
debentures, interest on bank overdraft, dividend paid, securities premiums received, premium on redemption of preference shares. All this comes under financing activity. Are you with me?
Yes, miss.
Okay. So we have done what? First thing is cash flow from operating activities, correct?
Yes. Cash
In
from
that
operating
we did
activities.
five things.
Net profit before tax, operating profit before working capital changes, then cash generated from operations, which is tax paid, and then cash flow or used in operations.
Net profit before tax and extraordinary items will be in your,
Net profit before tax, it'll be working note one.
what will be there in that working note?
Net profit for the year, transfer to reserves, proposed dividend,
Proposed
interim
dividend
dividend
of
in of the previous year,
interim
interim
current year,
current year, any
provision for
dividend
tax,
also,
hmm,
provision for tax, current
current
year,
year. If
extra,
they've given
yeah,
you a tax paid, then you have to prepare the provision for tax account.
okay, yeah,
Yeah? Then what do
yes,
you
miss.
add?
We add non-cash, non-cash, non-operating expense.
Okay. And
We will subtract non-cash, non-operating income. Yeah, in
what
this.
comes in normally expenses? What comes?
Goodwill written off,
Hmm.
and for depreciation and loss on sale of non-current asset for income.
Income में
This thing depreciation.
income is also depreciation and expenses also
Oh wait,
depreciation.
no, no, this is the other one. Profit on sale of non-current asset
यहाँ पे
at
interest
dividend
on
received.
debentures is also thing. Dividend received does not
Yeah.
come over here. Dividend received will be in your working note.
Oh, okay. So
Then you have
then
your working
in
capital changes. What will be then your working capital changes?
current asset, current liability,
Current asset, which direction you will work in?
opposite direction.
That means if it will increase, you will subtract.
Increase it will subtract,
And this will be in the same direction.
same direction.
Okay, then you have your cash flow from investing and financing, and then you get
Investing.
your net cash flow,
Yes.
which is also called your nice. What
Yeah.
is nice?
Net increase and decrease in cash and cash equivalent.
Then what do you do?
Then we do cash and cash equivalents at the end of the year.
At the beginning, you will add, you will get
Beginning,
it at the end.
add, end.
You add it at the beginning and you will get it at the end. Then there was something
Yes.
that we've learned that there are four things related to assets that you should always record. What was it?
Four things related to asset.
Four things related to non-current asset. Whenever there is a
Non-current asset.
non-current asset, you will go and check these four things that are related to non-current asset. What is it?
Um,
If asset is purchased,
yeah.
investing.
Okay. Yeah.
Okay? Asset is sold,
The investing, selling.
investing. Profit or loss on sale of non-current asset. This is non-cash, non-operating expense or income. And depreciation of
Yeah.
your asset is non-cash expenses. It is
Non-cash
asset.
expense.
Four
Yeah.
things related to non-current assets you should definitely do. Learn it, I'll wait for you. Now, this
Yes.
depreciation of the current year, which is your non-operating expense, in all the sums they will ask you to calculate.
Okay.
I'm not teaching you the account, I'm teaching you a formula.
Okay. Okay.
Closing assets at the net book value plus the assets sold at the net book value minus the opening assets, you will get the depreciation for the year.
Yeah.
Okay, so if you want to find the depreciation for the year, whenever there is asset, depreciation for the year has to be incorporated. So whenever
Yeah.
you want to calculate depreciation for the year, you will do closing plus sold minus opening.
Plus sold minus opening.
Okay, how do you get the net
Yes.
book value of your assets?
Net book
The book
value.
value. From the cost, you will minus the accumulated depreciation, you will get the net book value of your
Net book
assets.
value. Okay.
Are you with me?
Yes, miss.
So, with this, we've done with the format of the cash flow statement. Keep this in mind, keep the basic things in mind, and then we will can do the past paper questions. There are some things which are not recorded as cash flow, like checks deposited in
Yeah.
the bank, cash withdrawn from the bank. Purchase and sale of marketable securities. These are cash and cash equivalents. So this you will not take it as a part of cash flow. So this is the entire cash flow in one gist, but you have to do small sums to do the bigger part.